The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Welcome this Monday the 25th of August. And my pleasure to be here Monday through Friday, market days. And look at what we've got. We've got the Dow at 17,124, up 123. S&P is up 13.5 for 2001. These are big numbers. And you've got the comp index up, let me just check, up 30. At 45.68. Gold is down 3 at 12.77. Silver's down just a tad at 19.34. You got high-grade copper up at the 3.23 level now. That's good. Crude oil is down again at 93. And you've got bonds. Well, let me see. Bonds, you got the TLT trading up 1 penny at 117.30. Just want to check a couple of things here. Yep, trading at 130. And look, this is very interesting. USU 14. You've got bonds holding that 9-period moving average of 140, hit 140, this morning it hit 140, almost 141. And this is good action, but my suspicion is that in the next, let's see, we have to go, today's Monday, by Thursday or Friday, certainly by Friday's close, I think we're going to be looking at a situation. If I look at the 120-minute chart, look at this. You've got a low there of 119.11. Here it's 119.12. So let me just check. Was there a high 20? Right. So what we've got is probably a peak D. That's what you look for in the Chapman wave. Peak D is where you want to start being a little bit careful. Fourth highest peak from the lowest, most obvious low bar. Oh, it went to an E. So you go D right there. There you've got an E and turning down with the stochastic and the MACD. Still strong, but turning down. So it gives a little bit of a signal at the 120-minute chart with that doji candle right at the top. Funny how that works, huh? Right where you expect that if there is a turn, you want some kind of a signal, some kind of a confirmation that there's a turnaround, and lo and behold, you get this little doji, which very often is either a halfway marker or a reversal signal. So now you've had a pretty sharp reversal from the high of 140 and 30 seconds, trading now at 140 and 30 seconds, so half a point. And let's just move this away, and I want to go through some other things that you can see something very interesting. The volatility index, look at this. That VIX index is pulling back. 1147 was the previous low. Today's 1131 in leg D to the downside. Now, why do I mention this? Let me just get rid of that because it doesn't mean anything anymore. Because in the 120-minute chart, there was left side, right side price time match. And that went to the low of 1141 back on the 24th of July. Ran all the way up to 17.57, a triple top, pulls back, and what does it test? It tests the 1141 by going 10 cents lower in leg E. I believe a couple of things are happening. Well, number one is that this volatility index is getting ready for quite a nice push to the upside, but not yet. Why? Let me give you that relationship. If you're looking at the Dow, INDU, the Dow is in leg C. And what I've done for subscribers, one of the reasons why we wanted to go long, actually more than long, the other day, but just missed getting in, but that doesn't matter because we've got some stocks that are doing very nicely to make up for that. Is in this particular pattern right here, I had drawn this rising wedge formation with a test of the 17th of July high of 17,151 coming in. By the time we get to leg D, we should be at just under or just over that level. I also have a circle as that rising wedge formation climbs, and that says that there's a chance that we should get into this zone right here, and that takes us to the 17,200 area. The Dow's now still not at an all-time high. The S&P is. The Q's are acting brilliantly. But most importantly, look what we've got. We've got the stochastic at 95%. This is what I've been saying. We do not want, in my opening call, my daily newsletter to subscribers, we do not want to have any shorts at this particular time, even if there are some perfect situations. Why? Because in a rising tide, which we're in right now, a rising tide lifts most of the boats. And if it's going to lift most of the boats, it means that if you were short, you're going to have there's a chance you're going to have a little bit of pain in the meantime. But if you're long, there's a greater chance that the tide will save you, even if you are a tad early. That's what tides do. Tide goes out, it's the exact opposite. Every time you want to buy, you've got to be careful because that tide is going out, and it'll take majority of the stocks to the downside. Now have a look at this. Within the context of what we're looking at, the MACD is still climbing. That is there it's above the 0% line. That's the trading now with those green bars very, very positively to the upside. So at this, and look at the number of white candles. It doesn't matter if they're green or red. In this case, the white candles are up and black candles are for declining price movement. And look what's happened. You've only had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. I believe. Let me do it again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 sessions since the low of 16,333. And that was on the 7th of the 8th of... That was on the 7th of August. We just typed that in here. So we're looking at apples to apples, 7, 8. And then what happens? Nice move. And there is only one black candle. It wasn't even a down session in the normal context of things because it had such wide price movement. You remember the Fed came out, said something. Up and down, up, down, up, down, and closed down a little bit. But most importantly, the candle itself made a new recovery high. So that continues that floating letter B. And what do? We go B, peak B at 17,074. And then on Friday, the high was 17,064, 10 points lower. And today we break into leg C. Remember what I always talk about? In a bull phase, you want no more than 1 to 3 sessions. Usually it's 1, but 1 to 3 sessions of consolidation before you go to a new recovery high. And in the bear phase is the exact opposite. Look at the way down here. Always just one bar down, whoops, down, one bar up, and then whoops, down, one bar up, and you go all the way to trough D. Trough D turns around. Now we've got leg C to the upside. In a price movement that says by the 28th of August, we should be testing 17,151. Okay. Now, here's another thing that's important to me. In the, let me mention once again, because I'm liable to forget it. On Wednesday night, I will be the guest speaker at the 11th annual Boston Investors Group meetup. And that'll start, I believe it starts at about 7. I need to check on that. Maybe it's not, because they're going to have a little party beforehand. And I'll be the guest speaker. So I always enjoy it. It's just a great crowd, really a fabulous crowd. And we get into stuff that I normally just never get a chance to talk about. So I'm looking forward to it. And most importantly, you're all invited. If you're around, this is over at MIT, Massachusetts Institute of Technology, over in Cambridge, and it's just off Storer Drive. It's building E35E. I'll get all that information out to subscribers, and I'll talk about it on air tomorrow exactly where it is. But it's called the Boston Investors Group. Check it out. If you go to their site, it'll have all the information there. I'm really sluggish at doing that sort of thing, but I will check it out. I should have it right. Wait a minute. I used to have it right here somewhere because I knew that at some point I'd have to look it up. Well, I don't see it. It's here somewhere. I'll find it. And we'll talk about it. But it's over at MIT, and I'm looking forward to it, Boston Investors Group. So the Dow right now up 110 at 17,122. Leg C, stochastic flattening out at 95%. MACD still expanding. That gives you room to move higher. Now, let me just run a couple of things here. The QQQ, 1, 2, 3, QQQ series, that's the Power Trust series. Leg B. So that means, let's just say, imagine that we open down immediately tomorrow and it makes peak B. That means Wednesday will be C, Thursday could be peak C, and we'd have to go into Friday to get leg D. That's the soonest we can get it. And then what happens? That's when we become vulnerable in the Qs. And we will not go down seriously until the QQQ series, until the comp index, comp X, until the comp index, which is also in leg C, gapped up this morning, leg C, with the stochastic at 97%. That means it's 2.5 percentage away from 100%, which I've never seen. And it's very strong. And when it flattens out, remember I've given webinars on the MACD and the slow stochastic. When the slow stochastic is hanging out at this level and flattening out at this level, it's very positive. Weekly chart needs to make up a little bit. 9% is very good. Hasn't quite got to the 90% level, but it's still very good. And I can't help but call this a leg C in the comp index. That's very positive looking out. And leg E in the weekly. So why would I be saying that maybe later this week or early next week we'll get some kind of a turn down, and it could be quite sharp? Well, there are a couple of reasons. If you look at a number of the charts that I'm looking at of some of the biggies, some of the leaders in this particular phase, their weekly charts are all saying they're in Ds, maybe Es. So I'm looking at this and I'm saying, okay, it's time for a nice percentage pullback. We don't want to be early. Absolutely do not want to be early. So we're going to be waiting. And when I go back to the VIX index, let me show you something very interesting. The VIX index, right there, it's just a steady move to the downside. But if you look at the weekly chart, look at those big spikes to the upside. And what I had spoken about when I discussed this is I said, if on the weekly chart, the VIX index, the volatility index, $VIX.X is how I get it, trading at 11.32, down 0.15, down 1.31%. General market's up 0.60% or so. What I'm looking at here is that V-shape, inverted V-shape, single leg 8 up to the up and then down, has precedence in that if it did not close above 200%, and it's only done that in the last, since 2013, let me just scroll back here, it's only done that, let's go back to 2012. Even 2012, it did close a couple of times. Remember there was that sharp move in the market down? Well, that's where the price did go to 27.73. And then it pulled back very sharply. And that sharp pullback occurred in the week of the 15th of June, 2012. Well, there was a spike back over the 200-period moving average that couldn't hold more than the 1 week. There's a weekly chart back at 23.23, the week of the 28th of December. And then it pulls back when it spiked above the 200-period moving average a year later, half a year later on June, the week of the 21st, and then again on the week of the 28th to 21.91, back to the 21s. It failed. It came all the way back under the 9 EMA. Did it again in 21.34, back on the week of the 11th of October. And we've just seen it, and I'll talk about it a little bit more when we get back. Basil Chapman, Tiger Technicians Hour. We'll be back. Guys, up 112.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. And let me just quickly, during the break, I was asked about Twitter TWTR trading at 46.26 up 28 cents. There's a beautiful cup formation that's forming here. It's what I call the inside buy mode when you see a gap up and a pullback, holds a particular level of importance, in this case, the 200 period moving average in the daily. Now it's making a little inside peak, A, B, C. Usually what you get here is an overlapping wave, and if you can get that overlapping wave, it should go to a D above the recent high of 48 round number high. It should go just above that and then come right back and test into the 47, 46s. So this is a move that if you are long Twitter, the shorter term, no, a smaller position should have some kind of a trading, this is my opinion, a trading stop as the weekly wants to go to a D, but then I think it's going to do some consolidating, and so it's a trade. And I would, the moment it breaks above 48.00, the round number high, I would either start immediately just to take some off or to have a very tight trading stop and say, okay, Twitter, you tell me. So that's for one of our questions in the den about Twitter. And I'm going to go straight to our first caller. We got, I believe it's Jerry in the Back Bay, correct?
Right.
Hi, Jerry. How are you?
Good. How are you?
I'm very well, thank you.
I'm going to have to miss Wednesday night. I'm having a cataract operation on Wednesday.
Oh, well,
Yeah.
Best of luck with that. So that's one of those
I've had
few
one before,
operations.
so it's amazingly easy.
I was going to say, it's one of those high success rate operations, so good luck with that. We're going to miss you.
Two questions. One is a conceptual question of the market at this time of year is like the lowest volume of the year.
And
so
almost every day they'll turn around and someone will say, wow, that's the lowest volume we've had all year, especially Friday. Yep.
Yeah. What does that mean anything to your work? I normally ignore volume because I think everyone, like John Mendelsohn retired the other day, and I thought he kept making a mistake of saying, well, the volume's not good, but there's so much volume now in options and all kind of stuff, that I don't think volume is as meaningful as it used to be on the overall market. But I do wonder that you have such a powerful move on such low volume. Do you think that has distorts your work a little bit? And
okay, let me get to volume now. I've discussed this over the years, many, many times over the years. And my contention, and there have been articles that I've discussed here that have come out in Stocks and Commodity magazine. There was one article where I can't remember, Bukowski, who was it? Someone who analyzed 10 million charts on volume. And the conclusion was that when volume works, it works. When it doesn't work, which is very often, it doesn't work. So my conclusion to that was that it didn't change one iota what I've thought about volume all the years. It is how you use it. And people have different, I know people that have used volume and use volume very they have a very clear definition of how they want to use volume, why they use it, and when they use volume. Tom's a good example of that. Dave White is a very good example of that. He's got a power law vector indicator, which seems to really give tremendous information about volume and good information. But my opinion about it is that over the years, and I used to work very closely with someone who absolutely volume was absolutely, it was to not use volume was tantamount to a crime as far as he was concerned. But I found that with my Chapman wave methodology, for instance, I've been talking about the going to leg C and leg D in the Dow based on not volume, based on the methodology itself.
Right, sure.
Once we broke a certain level. Now, so all I can say is that I use unbalanced volume, and I use it in a very specific way. I'm showing a chart right now. If anyone's looking at Tiger TV, you'll see the Dow is how that blue line is unbalanced volume, and it shows it's gone to a peak. And let me type it in so that we've got it here for the record. It's gone to a peak A right there. It's gone to a peak B right there. And these peaks don't necessarily coincide with the peaks in the market. They often do, but very often I've noticed that you might just miss on the unbalanced volume a particular peak because it was intraday on the price of what the chart you're following, but it absolutely showed up on the unbalanced volume. So that bar that I was talking about just a little while ago, that was that candle of the 15th, big up and down, a huge long-legged wick with a big body. Well, that showed up as a peak C the day before.
Yeah.
Now, what I'm talking about is the answer to your question is it is the intensity of the buying. And if you make higher highs and higher lows, that in essence is giving you something that is even more informative. If you've got a moment, Jerry, I'll be right back. So
okay,
Jerry's holding on. I'll be right back with Jerry. Dow's up 120.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back, and we're back with the Dow up 118, S&P up 13.5 on this 25th day of August, and we've got Jerry in the back bay talking about volume. And one of the things that I want to re-emphasize again is that I don't care what particular technique anybody uses, if it works, and if they have a methodology that is robust and concrete, and they can constantly come back to it, and it just gives them the results. That's the way it is. But as I say, in many tests, volume per se, I think it's the way you read volume. That's number one. Secondly, for me, it's the way I read the unbalanced volume, just based on the Chapman wave methodology. And that says, in my particular way of looking at it, the Dow is making, I'm looking at patterns in the weekly chart, making a V-shaped pattern, probably going to test the 17,151 area very soon, probably going to go a little bit above it. And then we're at a particular level, chart pattern wise, and in many other ways, in terms of the VIX, in terms of sentiment, in terms of my reading of other areas. For instance, look at the IYT. Remember, I spoke about this. Where did it go? IYT. Spoke about it the other day. I said I believe the IYT, the transportation index, should be making a V-shaped pattern. I drew it the Groucho Marx eyebrows pattern. Well, there's no such thing as a Groucho Marx eyebrows pattern. It's just a V-shaped pattern that I drew and I recognized during one of my Master Trader series once. And as as a joke, I said, oh, it just looks like Groucho Marx with the eyebrows and the schnoz, and it comes back to the right eyebrow, and then it comes back down, and it should test in this case when it finally the IYT transportation iShares makes its final move in the weekly chart. It should come back and it should test the 9-period moving average. So I try to put that all together. So the answer to you is that I go through this every single summer. People keep saying low volume, we're going to highs. And you know what? This is a mega bull. This is the greatest bull market we have ever seen, and I don't think we've even seen close to the top. One of the reasons being is that I talk about the skyscraper theory, and we're only now starting to get all those pertinent things right in the den. Someone has just mentioned, who was it here? Something about the Woolworths building. Let me just find that. So was it the Woolworths building? Yeah, the Woolworths building in New York City being turned into condos for billionaires. Well, this is exactly the type of thing that you see that goes on and on, and it goes on for a particular period of time. There's a certain time limit as well, where everything that you read about is the biggest and the best, or the tallest and the highest. Everything. That doesn't matter what it is. Earning. That's why I've said, a couple of years ago, I said, we haven't seen anything yet. We're going to hear about a house, not a building, but a house that's being built, and it's going to come up in a figure that is so staggering that people will just say, that, you could have an entire city live in the house, but that's the way it's going to be. So that will be represented by man's icon, man and woman's time freeze to their ego, and that's usually a time freeze of a particular, like the Empire State Building, the Rockefeller Center. All of those were passed in August of 1929. All the papers were passed. Goldman Sachs came public in 1929. I did a webinar, I think, a webinar, and I showed the whole timeline of Goldman Sachs and how they spun off. It was just an incredible thing, how much money they made doing exactly what they're doing now, but they did it way back in 1929. So those are the things that are unstoppable now, as far as I'm concerned. I was at Tanglewood this weekend, and I'm just thinking to myself, well, what a fantastic was for the dress rehearsal of the Beethoven Ninth with Charles Dutoit and the Boston Symphony. It was just the most fabulous performance. It was just a rehearsal, but it was brilliant. It was just fantastic. And I'm looking around, I'm saying, we're driving out, and I'm just looking. You could just count the number of cars, fancy cars. You go to the supermarket, just your local supermarket. Look at the parking lot. There are cars that are double the price of what they were just 5 years ago for the fancy cars. So we're in an era of show-off. It's okay. It's acceptable. Young people talk about, talk about ecology, etc. But they're the ones that are doing all the buying, and there's always this hypocrisy. Very interesting period. So I don't care about volume. I just care about the price.
I agree. Yeah, I tend to agree with you. Yeah, it's an old Chinese proverb. A Fed pumps $4 trillion into the economy, a lot of things will go up.
It just kind of helps, doesn't it?
One quickie. But will the IWM make a new high this cycle?
Oh, the IWM, now that's very interesting because, you see, IWM was lagging.
It keeps lagging, yeah.
Now it's in leg D. It's still ahead of all the others. I think the IWM is telling us in the shorter term, we are getting close to some kind of a pullback, and that pullback, I'm not sure yet, because when you've gone 400, 500 points or 700 points or 1,000 points higher than what one would even expect normally, it means that if you get a pullback and you only go back 800 points, you've barely had a pullback. But I'm looking at this, and I suspect that the pullback that we get going into the end of summer, early fall, is going to be one of a bigger percentage than we've seen before. So that's the best I can do. I don't have a signal yet, but that's what I'm thinking. All right.
Thank you very much. Have fun tomorrow.
Thank you very much on Wednesday, and best of luck with the cataract surgery. That's usually one of those that is just a perfunctory situation, but nothing can be taken lightly.
Yeah, they told me 98% success rate, right?
Yeah, it's like the hip replacement. It's a very high success rate. So best of luck. I hope to hear from you real soon.
Thank you.
Bye, Jerry.
Bye-bye.
So let's go. We're going to go to Scott in Safety Harbor. Scott, how are you?
Basil, words can't describe it. I can't. Wow. I know people say better than I deserve a lot. Well, that's the way I'm feeling right now. Bank of America came in, Apple came in.
Absolutely.
I mean,
now, what you were discussing
is everywhere.
Yeah, this Bank of America, but most importantly, what, as I said before, I would like to buy Bank of America on strength. And that's very interesting because what we've got, BAC right now is at 16.39, up 26 cents. And those peaks, this is not a stair-step move in Bank of America. This is a very powerful move in the daily chart.
I agree totally. And
right.
You put that together with the news, with every single analyst, every single one. They're very seldom all on the same page. Even the naysayers are now like, well, Hammond and Hahn, well, you know, it's, yeah, I hate to say it, Bank of America. I mean, that's just the way they are because you can't, the fundamentals, which I don't put a lot of credit in and neither do you, are all there. The chart is all there. The problem is now out of the way. And also, I'd like to throw into that to the fact that I truly believe when there's a lot of trouble overseas that people put money into accounts in America. And if you're overseas, and you come over here, which bank are you going to stop at? Bank of America.
Well, it's one of the very familiar banks, and it's been in the news so much, and it's held, as you say, it's held so beautifully. This is a very interesting chart pattern because if I look at it purely as a chart pattern play, the move that it made from 19.86 back in, I think it was 2010, down to $4.92, and then back up again in alternate wave count G/E in the monthly chart to 18.03, which is really only a point and 3/4 below that high of 2010. So that's over a threefold increase. Then it comes back down with a doji candle under the 9-period exponential moving average, and for the last 3 months, it's struggled to break away from that 9-period moving average. It's like, I call it the magnet line. But what's so important about Bank of America is that if a week from today, I think it's a week from today, I'm not 100%, what's today, 25th? So that can't be let's see, so that'll be, let me have a look here just for 1 second.
I would just say this to all the people that want to trade Bank of America. I trade it every day for,
right.
Probably 7 years now, that in the mornings, like right now, if you got it, I mean, most of the time I sell it. But here's where I'm at today. Unusually, I haven't sold my Bank of America today. I usually sell it, in the morning around 10:30, 11, and then buy it back in the afternoon. But today, I'm thinking, that's why I called you. I'm thinking it may get ready to be a $17 stock.
Okay, so let's just do this because I just had a call from Jerry in the Back Bay, and now I'm going to put I'm going to put on a 10-minute chart. I'm going to put Bank of America, and if I put that with there are no technicals. I happen to have candlesticks. Why? Because in this particular chart formation, it's a little easier to see if I've got the candlesticks. So if I run it from the low here, it goes from this particular trough. It goes. Here we go. I'm just going to type it in. It's a 10-minute chart. That's all I'm going to do. Put in A, B, and I'll tell you where I took it from. A, B, C, right there. C, right there. Then you get your D, and it's a little double top. And then, this is very interesting, it goes E and F. In the Chapman methodology, the 6 highest peak, when you get to peak F, you've got to be real careful because that's when you can use time or price or both. In this case, it uses time rather. And I went from the low of at 2 on the afternoon of the 20th of August, the low was 1537, and it goes peak A, B, C, D, E, F in the 10-minute chart to the high of 1020 in the morning on the 22nd at 1629. And then what does it do? It trades in a very narrow band between 1629 and 1614. But what it does, and this is really interesting, so I want you to do this because I want you to show that chart patterns can also give you a tremendous amount of information. Just as if someone does use volume in a particular way, what that information gives you is usually pertinent to the patterns that form, pertinent to the repetition of patterns. So
this talking about repetition, if you go back to July 26th, when it was 1473, you'll see a similar pattern as to where it is, what I think it's going to go right now. That's why I believe that it's going to get back up to that 1718 on March 26th.
Well, let's put it this way. I'm going to say to you, that should be an A. I'm going to say to you that chart-wise, I think you're absolutely correct. Time-wise, I just wanted to show you what it needs to do, and that'll allow it the freedom to be able to go higher today. In the pattern that we've just seen, I've got it as ABCD, and that's from the low of 10 past 11 on the 22nd of August, and that was at that 1608 level. It's gone AB, but now this is really fascinating. Patterns repeat, and the pattern that I'm talking about here is the H pattern that is a successful lowercase h pattern. It's actually a little double H pattern, and in the Chapman wave methodology, in my CD introducing the Chapman wave methodology, there's a chapter 17, where I talk about this very pattern and what can happen when finally there's a pattern in this lowercase h formation, there it is, that actually succeeds and it holds. And this is exactly what you did. Very large, it's like an inverted bowl formation.
Right.
And now what's happened is it's gone. So you could even recount it and say this is A, B, C, D, E, F with a little doji candle. I've got it as a G/C. What I'm expecting is that at 16.39 on the 10-minute chart, and there are no technicals here, it's just the price movement that I'm looking at in the Chapman wave methodology, there should be a pullback sometime between now, it's 10 minutes to 12 Eastern time, between now and 1:15. Well, I'd say between now and 1:06. 6 minutes
that would
past
be consistent to what it usually does, yeah.
And if it can hold between 1634 and 1627, to the key lows in this 10-minute chart, if we can hold there, it could have a sudden burst of energy. And one of the reasons why I'm looking at it is, just as you spoke about Bank of America as being probably a favorite for folks who are trading from overseas and want to put money in America. So I'm saying it's one of the low-priced, not necessarily cheap, it's just a low-priced financial, XLF financial ETF
that's what I think.
component.
What you're saying, I think, might happen this afternoon, and the traders themselves feel it like you and I do. So when it does make that slight pullback, maybe 15 cents or whatever, they're going to say, okay, let's just do it, and they're going to get into it, and that's going to be that surge that you're talking about. That's going to
right. So if it happens between 250 to 10 to 3. And 320, if the general market has pulled back just a little bit but is holding well, and it suddenly has a burst of energy at 10 minutes past 3, Bank of America now is actually a leader, because if you look at the price movement, it's in a very strong leg C.
Right.
It's only taken a brief moment to test the 9-period moving average, and then it just takes off. So
there's a lot of people putting it in the cupboard, as you said. There's a lot of people.
It's the sexy stock of the moment in terms of the quiet under the radar. It's really an under the radar stock, because there are not that many people that are actually bullish on Bank of America. So I'm with you. I think you're absolutely correct. But in terms of the intraday action, if it starts to go under $16.15, then it might have a little bit of a pullback into tomorrow morning. But it is definitely a very strong stock right now.
Basil, since December 5th of 2011, when I bought it at $6, I mean, everybody's been against me. Every single person. But now everybody that I know and all my family members are coming to me for money. I mean, it's paid for 2 colleges and a house.
Oh, that's fantastic. Well, bravo. Congratulations, Scott. I think that
I finally opened an account there 2 weeks ago just for that.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. day. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Folks, Larry Pesavento coming up. This is a key time. I'm really looking forward to listening to Larry. So stay tuned because program right through the day here at TFNN. Great program. So let's go back to Scott. Scott, you'd actually like to look at?
Yeah, Apple. I'm looking for an entry point. I had Apple and I sold it. I really didn't think it was going to move this high. I sold it at 99, but it's. I think we're talking about $110 stock here. I hate to be so bullish on everything, but I mean everybody's got an Apple in their hand. I can't stand them, but you know they have them.
So yeah, I have to keep thinking now of maybe changing from the Droid to the Apple, but we'll see what happens. So I'm looking at Apple right now at 101.98. So you had it and you got out just recently when it kind of stalled with a candle, doji candle.
When it stalled, I got spooked and I listened to too many people on TV who were probably hoping that they could beat it down by their words. So they, a lot of these analysts on there, I mean, these are guys from hedge funds and stuff, and
yep.
Of course,
They
if
like
they
to
want to
talk their
badmouth
book.
it, so they
Right.
can. I explained it to my wife. I said, yes, you're beating up. You got a car for sale that you want, and you beat it up in the neighborhood. Then you go and make a guy an offer on it. You know?
A low bid offer, which you're hoping
Right,
for, yeah.
exactly.
So, okay, Apple right now in the 120-minute chart, leg D, it's walking the 9-period exponential moving average with support at 101.30. I'm going to make a suggestion. You don't even have to do it right now because I've got a feeling that tomorrow we'll have a little bit of, or maybe it could be later today. I'm not sure yet, but I'm looking at it and I'm thinking that there could be a little bit of a pullback tomorrow because we came in with a gap up, and very often over the last couple of, actually the last 6 weeks or so, the gap up sessions tend to also have some kind of a pullback unless we close at the high of the day, and you usually know how we're going to close as we get into that period between
Well, they have the iPhone,
1 o'clock and 2.
Supposedly, it can't, they have a little glitch in getting it out on time and stuff, so I was hoping that, would affect
You know
it
what?
somewhat.
I think that you mentioned it before, and I think you're right, that this is like, this is the focal, not under the radar. This is the stock that many fund managers are just grabbing because
this
it's
is not on the
a
radar
safety
at all.
play.
This is on
different.
everybody's
So,
desk.
can I make a recommendation, because I know that you follow these things very carefully. From my 120-minute chart, I wouldn't be surprised even from the Apple and the 10-minute chart. Yeah, even from the 10-minute chart, it looks to me like the high that was made at 102.17 this morning. Yes, it could be tested, but I think on a very short-term basis, we could get an 80-cent to about $1.50 pullback in Apple, even if it's a $2.50 position. I've got this in leg B. The MACD is very strong. The stochastic is very strong. Why not start a little position right now so you're in it? If it gets away from you, at least you're in it. Mm-hmm. And you know that you've got a 2 to 3 point downside risk at this stage, because it really does look like it's the go-to stock, one of the go-to stocks here at the moment in this particular market. It's a leader. It's gone above the previous all-time high of 100.72. That was at 107, I think 50, whatever it was back in.
I had predicted. A lot of people told me that I was crazy when it was 700 and it went down to 100, because I knew that just the public perception of it. No one wants to buy 2 shares of something, and yes, it means the same thing, but it doesn't matter. Public perception is what drives a lot of stocks nowadays. And
and that's like when Jerry called about volume. Right now, there's nothing else to go to, and stocks are really the rigor. You have no choice, but if you want to be involved in something that's going to give you incremental percentage gains.
But if it does what you say with a 50-cent drop, I think that's going to spook people a little bit. Even a 25-cent drop at this point spooks a lot of people. Then that causes 50, then that causes $1.50.
Right. So in your case, it doesn't really matter that much because you're looking for higher prices.
Exactly.
So I would recommend just a nibble here. You're in the position, and then you get your plan in place. So thanks for calling, and congratulations on your Bank of America, Scott. That's great. So I'll be back tomorrow, folks. Don't forget my opening call. Check it out. I think you might even have time for that 40% discount. I don't know if it's still on the front page of TFNN. Stay tuned for Larry Pesavento. I'll be back tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.